Hey everybody, today is Friday the 22nd of March 2013, and this is Brian Shannon speaking from alphatrends.net. Hope everyone had a good week here. It was a little bit volatile. People were prepared for the end of the world and the banking system on Monday, but at the end of the week, the S&P 500 just lost a fractional amount here. The bigger damage was done to the financials and the semiconductors. So let's take a look at the markets here. The S&P 500 did hold above the 20-day moving average. That's the blue moving average in there, and this prior important level over here, that is the peak from February. Actually, we came down and tested that. So next week we'll be looking for that to be our key level of support for this market to hold at about 153.5. Now we've got this market kind of flattening out a little bit, and it looks like for now it's a correction through time. Markets correct either by pulling back price-wise or correct side through time as the market holds up. And so far, this is looking like more of a time correction. Getting back below about 153.60 would maybe make it a little bit more serious, but still, with an advancing 50-day moving average, I don't see any signs of a top or any sort of disaster looming for this market. When we look at the 30-minute time frame, you can see here where we had the resistance this week at about 156. So next week, if we're able to get back above and hold above, I like to say usually for about at least a half hour or so, if we can get back above and hold above 156, then I think this market has the chance to get back up into all-time high territory. So again, we're in an uptrend. It's innocent till proven guilty. Headlines can get us scared for a little bit in there, but when the buyers come back in and take back control, here we can see the volume weighted average price for the week. On average, the S&P 500 traded at 154.92. So that's the average price it traded at, a dollar weighted average price. So on balance, all the buyers were positive this week, and I view that as bullish that the buyers took control, especially in the light of so-called bad news. This market has continued to climb a wall of worry. That's what bull markets do. They absorb that bad news, and it's said that all the good news comes out at the top. Now, it's not a timing tool, it's more of a general observation. What we need to stay focused on is the same thing we always focus on. There's only one thing that pays us at the end of the day. Say it with me. Price. Only price pays. All the rest is interesting. It's good to create economic theories around, but the financial reality of trading comes down to price action and being able to observe it objectively and know when to step aside, when to manage or how to manage risk properly, and recognize the signals that the market is giving us. And here those signals are short term. We're correcting, but we're in a primary uptrend, so the buyers do get the continue to get the benefit of the doubt. The NASDAQ rather, did come down close to that 50-day moving average. And last week I was saying I thought it was likely that we would test the 6780 area as this prior band of important level we've been talking about on and on again at 6780 up to 6820. That did give way here, but the market recovered from it, and here we have a higher low. I'm still going to say that 6750 is the more important level that we want to watch next week, but even breaking below that I don't think would be a disaster. If you look at the action, if we were to come down, let's say a little bit below the 50-day moving average and then perhaps bounce, that would be an okay scenario as well. That's kind of what we saw in the semiconductors. We closed right on it, that the semiconductors a week and a half ago broke out to a new high. From that failed move came a fast move. It tested the 50, pulled back, and here we are trying to stabilize near the rising 50-day moving average. And I think that, so just to transition to the semiconductors, that it's still, we've still got to be cautious here that we broke what we were calling a fairly important near-term level of support at 35.40. So it's looking like a bigger range really right now of 34.30 up to 36.10. That what we want to see for a more healthy environment is back above 34.50, but I don't think we're in any immediate danger of a larger breakdown here. This level, if we do see some weakness next week, maybe we get down towards about $34.30, so just below these lows, just to kind of shake people out. But I wouldn't expect expect that breaking the low end of this range would be fatal for the market. It would be reason for continued caution in there, not a reason to get cautious. Continued caution because we're below a declining 5-day moving average. The Russell 2000, what did that do for the week here? The Russell 2000 for the week was down 0.2%. And it still holds up really well. We've got it still above this prior level that we were talking about at about the 93 area. So 93 held all this week, and that was where we were expecting initial support to be found. I was outlining, I think on Wednesday, a bearish scenario would be if we came up and did something like this and then broke down. That's just a scenario. That scenario didn't play out, but that would have been a scenario that would have turned me a little bit more bearish near term, but still within a primary uptrend. If we broke below that level, my point was, and I hope this was clear, is that we would be then expecting a deeper pullback, perhaps down towards this prior resistance area at about 91.5, and maybe we would even expect to meet the 50-day moving average in that area. That's still a scenario to be aware of for next week. So this level in here at about 93 is going to continue to be the important level. As long as we remain above that, we're innocent until proven guilty. We're showing a little bit of volatility, and correction through time is not a bearish thing. It's a bullish thing to correct through time and absorb the price at the higher prices. The semiconductors we discussed already. The financials they were down for the week 1.46%. So they had the worst performance of the groups that I typically cover here, but still, really, you can't look at this market as bearish at all. We're still kind of closing in on that bigger 20 level that we've been talking about for months, that the market seems magnetized up towards that level, and that it's not likely to go straight up to it. We saw 3 weeks ago a test of the rising 50-day moving average. That got a lot of people nervous, but that which doesn't kill it only makes it stronger. It rallied up, and now it's correcting that most recent rally, and we have to be a little bit of concern here in the near term because we are showing lower highs and lower lows. Well, finding a little bit of support actually at about 1805, but we have these lower highs below a declining 5-day moving average. It's not bearish, except for maybe a short-term trade. It's because of the primary uptrend really takes precedence over any near-term bearishness that you see. So I look at it as more neutral. Yes, you can make money shorting in an uptrend. You could have made a little bit of money over in here, maybe right here and there. My point is always that it's much easier to stand aside during the periods of indecision rather than try to fight the trend, because news and surprises tend to follow the direction of the trend. And obviously, the sum of the rallies is going to be greater than the sum of the declines in an uptrend. So why make things difficult? Stand aside when things are uncertain. Wait for the markets to recover, the buyers to come back in, and then take advantage of the next little rally that may come. Or you just continue to sit on the sidelines and don't in either short-term trade, that is day trade on the short side. But again, even overnight stuff, I think it's just too risky to sell short when the primary trend is up and as strong as it is now. Let's take a look at gold, because a lot of people got excited about gold, thinking that it was a flight to safety. Gold's still in a downtrend. It's still below a declining 50-day moving average. We've got this prior bigger support level. Perhaps we get up to that area, but really we didn't even gain all that much in gold. I think that it's still likely to drift down towards about 147, 145 over the coming weeks. And Apple, let's talk about that. Apple had a good week for once. This line I drew in last week, which is the trend line that we had broken. And again, trend line breaks don't mean that the decline is over. It means that we've got the rate of descent has slowed down, and perhaps we're going to turn into a more neutral period. But it doesn't mean that now we have an uptrend which could be trusted, because we still have a declining 50, 150, 200-day moving average, and it takes time for markets to heal. Meanwhile, there are some great bounce trades that you could look for, and we're coming up to what I want to do is just draw this in here, which is a volume-weighted average price. You can see this on Realtick, that we have this volume-weighted average price trend line I can draw in, and it comes up to, if you look in the corner there next to the it clear all in the lower left corner. 667. What am I talking about? $467.76 is the volume weighted average price year to date. Perhaps this market continues up towards that. There's a lot of people, and I think uneducated money, that gets involved because they say, hey, it closed above the 50-day moving average. More important than a close above the 50-day moving average is that the direction indicates that the trend of the last 50 days is still down. This is most likely a blip in that downtrend, and people who chase it are likely to get trapped up in here. We did have constructive action, though. If we take a look at the action since the gap lower on earnings, you can see that we are closing above that level. But more importantly, if we look at the volume weighted average price since that level, and I mentioned this, I believe, Wednesday in a video, the volume weighted average price for Apple since January 24th when they reported earnings is right here at about 450, and you can see that the stock got above that, tested it as support, and that held for a couple days. So there might not have been what looked like traditional support levels, but we had this volume weighted average price year to date, and that is something that a lot of institutions pay attention to. So it held as support, and then we saw very tight volatility, a big move on Thursday, and then today was a real nice trend day higher. So there's a lot of opportunity in Apple for short-term trades, but I'm going to repeat that I think that we may have seen the worst in terms of this being the bottom. I kind of doubt it. I think that what's more likely is that we maybe rally up. Here's a scenario we could even see, I could even see happening, is we rally up, pull back to 450 again, and create an inverted head and shoulders pattern. That's something to consider, because that would allow this 50-day moving average to flatten out. Now that's going to take 3, 4, 5 weeks to set up, so it's not something that I'm trying to call, but it's something to be aware of. You always want to be aware of what are the potential scenarios. That's what I emphasize all the time in StockTwits, in Alpha Trends in the subscription product. I've got a chat room for subscribers, and in the videos that I do each day with new ideas. So hope everyone had a good week. I'll talk to you next week. Thank you.